Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Monday, December 16th, 2019. And here are your top stories. LinkedIn's top 20 big ideas for 2020, and healthcare bills keep on soaring. Well, it's Social Media Monday, and that means a look at the intersection between retirement, personal finance, and the latest social media trends. And joining us, as always, Devin Banerjee. He's a senior financial services editor for LinkedIn. Devin, good morning and welcome back to the program.
Thanks a lot, Jeff. It's good to be with you.
It's great to see you as always. And I know you were at home base this week in San Francisco after a lot of traveling. So you've had time to sit down with staff from around the globe. What are people talking about at LinkedIn?
Yeah, Jeff. So last week we published our annual list of the big ideas that we're seeing on LinkedIn. This is a roundup from all the interviews we do throughout the year, as well as all of the data and insights we see from our trending topics on LinkedIn. So in this first segment, let's talk a bit about capitalism and the economy. So among our 20 big ideas, several were focused on capitalism and the economy. The first is that this idea that capitalism and how it's been defined to date will really be tested. It's really being put on trial. And on one side of the argument are a few voices who are a bit surprising. One of them is someone who has benefited from the capitalist system as it has existed for decades. That's American hedge fund billionaire Ray Dalio. So he actually says that capitalism, as it is defined and as it works today, is really not working for the majority of people. And so he's looking at this widening wealth inequality. He's looking at actions by central banks, actions by chief investment officers at pensions, he even mentioned, and he's saying this is not working for everyone. So he's blaming a lot of different people. Central bank activity, he says, is really inflating asset prices that are already being held by wealthy people, are already holding these assets, and so they are the ones benefiting. Those at the bottom of the ladder are not holding assets like stocks and other investments that are appreciating. He calls out the pension crisis here in America. I mean, if you look at some of the biggest pensions, the CalPERS and CalSTRS of the world, as well as all the others, they're quite underfunded. I think CalPERS is about 75% funded, or maybe around 70%. And he's saying, these chief investment officers really need to rethink how they're allocating and how they're managing their in-house investments and their staff and their approach. So that was really interesting. And of course, also the Business Roundtable statement over the summer. It's a group of the Business Roundtable CEOs who penned that letter saying that shareholders should not be the primary recipient of corporation service, and it should actually be multiple stakeholders. The communities in which businesses operate, the employees. And so this year we just saw a lot of these different voices, kind of surprising voices, people who represent, you would think, capitalism as it has stood and been defined, who are calling on changes, pretty fundamental changes to the capitalist system.
And so what has been the response? Obviously, people obviously are entitled to their opinion. Certain people's opinions carry greater weight just because of their success. I mean, you mentioned Mr. Dalio, Stephen Schwartzman. There are a ton of people Jeffrey Gundlach, that are often Warren Buffett, to name just a few. But I would imagine that for every argument, there's a counter argument. So have you gotten a lot of feedback to that particular comment?
Yeah, there's absolutely been, specifically other investors who are not, multi-billionaires and have the luxury of making this argument. And also a lot of investors who say, look, we take on fiduciary duties when we're managing other people's capital to invest with the highest risk-adjusted return, and we can't really think about these other stakeholders or redefining capitalism, as it's been defined. So we saw a lot of those voices, but as you and I have talked about a lot, there are these huge other stakeholder groups that have really become activated with all of this talk and conversation, especially employees of companies and especially consumers, everyday consumers who can really vote with their wallet and their spending dollar and they are looking to deploy their dollars with companies and corporations that are thinking more about these ideas. So I think this conversation will continue into next year, and maybe only increase in pace and fervor. I just want to mention a few other of our big ideas that relate to capitalism and the economy. One is about venture capital investors really raising the bar in terms of the companies they back. We saw this year kind of an awakening, if you think about it, with the public market being approached by some of these loss-making, these unprofitable companies. If you look at the public market debuts of companies like Uber and Lyft, and then the absolute putting down of the foot on WeWork when it came to public market investors to try to make its case. So we're going to see venture capital investors really raise the bar, we think, going forward. And then another one of our big ideas was actually about all this talk of recession, which has kind of abated, but we think it will not end. Of course, every day we wake up, we're just mathematically, statistically closer to the next one. But some of the smartest voices on LinkedIn and off of LinkedIn have said that they see, this expansion, this now record-long expansion, continuing through 2020 and even into 2021. So that includes even our current Fed chair, Jay Powell, Janet Yellen, our former Fed chair, Christine Lagarde, the new ECB bank president, and a ton of other of our most influential voices on LinkedIn are looking at the data, looking at all of those indicators, and seeing this expansion actually continue through all of next year.
And I guess that's a good sign. For many years, we've been talking about a downturn, and I guess we didn't talk ourselves into a recession, but I think statistically, you're right. Investors, whether you're in a 401k, an IRA, or an institutional investor, you have to know that the sand in the hourglass is running out. I mean, we are in the longest economic expansion, in the last 50 years or even beyond that. And I'm sorry?
I think throughout history now, yeah.
Yeah, so I mean, it's absolutely amazing, but you have to know that we're on the back nine at some point. And so you have to kind of factor that into your planning. But no matter, it really is amazing how the market responds and how the market has responded to these negative calls. And for every negative call, you get a positive call. But I think you're right. I think this is something that doesn't ebb. I think it continues to flow going forward. Devin, one question I wanted to bring it back to, you were talking about these outside, or not you in particular, but referencing the outside stakeholders. And one area that I really wanted to mention to you or talk to you about was sustainable investing. And I know you've done a lot of work in this. You've been on a lot of different platforms or panels talking about this, I think most recently in New York, if I'm not mistaken. What's the team's take on that? Because I think it dovetails really nicely into what you were saying in the first part of the segment.
Yeah, absolutely. I mean, this has been something we have heard anecdotally so much and qualitatively. You hear at big conferences, investors talking about the importance of this, but we're starting to really see it come through in the data with investors saying, even big institutional investors. So Edelman just came out with its barometer of global institutional investors, and more than 80% of them are saying that, ESG considerations among companies they invest in are really rising to the top of their list in terms of their consideration. We saw north of 80% of global institutional investors in that survey say they would consider, which is a very important word, they would consider investing with perhaps a lower rate of return if it meant backing companies that were more sustainable. So that sparked a really passionate conversation on the story we featured last week. But a lot of investors came out and said they agree with this. They are one of those 87% who believe in that. And what they're saying is that a sustainable business today will actually in the long run be a business that generates higher returns for its investors and shareholders going forward, because the world is changing, consumers are changing, regulations are changing. We're seeing that constantly. We just saw in Europe that the European Union or the European Commission come out with a Green Deal, urging the biggest banks to stop financing, coal-powered plants and other non-renewable energy sources. So it is true that it's not just a a do-good mentality that these investors are thinking about. They're actually looking forward, looking around the corner for what businesses can and will perform in an environment of changing consumer preferences, regulation, all that kind of stuff.
Yeah, I mean, I think this is a trend, a big trend, and one that will continue. And I love that you rolled out your big ideas for 2020, and people can certainly check that out online. And I will post a link to that in the description summary of our show. So with that, let's take a little bit of a break, and when we come back, we'll talk to Devin about, I think we're going to talk healthcare, if I'm not mistaken, Devin?
Yeah, we got several big healthcare trends, so let's hit those.
Yeah, let's hit those. So stay tuned, Devin, hang loose, and you stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. Well, 2020 is literally right around the corner. What does that mean for healthcare? We're talking with Devin Banerjee. He is the Senior Financial Services Editor for LinkedIn. Devin, thanks so much for sticking around this morning.
Absolutely, Jeff. My pleasure.
Always great to see you, and great first segment. I love the big ideas again. Let's shift gears. I know you had a lot of conversations this week on healthcare. So what's top of mind for you and the team there about this obviously very important issue?
Yeah, that's right, Jeff. So, as the year comes to an end, and actually the decade comes to an end, we're looking at a lot of stats about cost of healthcare spending, here in the U.S. So what a lot of our smart voices on LinkedIn are talking about is, look, the healthcare industry had almost a record year in terms of profits this year. That's expected to continue directionally next year. And what does that mean for patients? Well, it's coming from hefty bills for patients. The U.S. spent just north of $3.5 trillion this past year on healthcare. It's an average of almost $25,000 to cover every family. We saw household spending, cross $1 trillion this past year. And look, as you know, it's not a surprise. Americans among developed countries are spending, the highest proportion of income on medical expenses. So the U.S. in terms of GDP is allocating about 17% to medical bills.
Wow.
The global average is only about 8.8%, Jeff. That's according to the OECD.
So twice as much.
Twice the average, yeah. So this trend is really not abating, which many people thought, a year ago or several years ago. And so, all of those solutions and tech-enabled solutions and regulation have not really made a dent yet. And so, as you mentioned, we did put out our 20 big ideas for 2020. One that's kind of related, actually, is a global shortage of nurses. Actually,
Mm-hmm.
The World Health Organization has really become quite vocal about this, including on LinkedIn. and so this is more of a global trend, not just in the U.S., but they're seeing a shortage of about 18 million nurses over this next coming decade.
Oh, okay. Wow.
But yeah, nurses, midwives, particularly acute, of course, in low and middle income countries. So we're not talking so much about the U.S. But what I found really interesting about this is that this workforce is actually predominantly women. And so this is an issue where, investing behind it kind of pays a triple dividend, as the WHO is saying. It's for health, it's for economic growth, but it's also for, gender equality and toward gender equality, because right now those jobs are not being filled.
So 18 million nurses, and that's the deficit over the next decade. Where and U.S. healthcare spending is nearly double the rest of the world. Where do we go to get medical support? And by the way, and we've talked about this, healthcare in retirement, astronomical, going to be astronomical. Where do you turn to get healthcare? The doctors, as we've talked about, and I hate to be negative, but we've talked about the medical deserts. I think that was one of the stories we talked about several weeks ago. Not enough doctors, medical debt, $200,000. So where are we going to go to get our health care? Is this something that we're going to get? And I'm not asking you to solve the problem. It's more rhetorical, but are we going to get it from, we're going to call someone on the phone? We're going to use our devices? We're going to be scanned or all of the above?
Yeah, I mean, a lot of people looked at those solutions you just mentioned as kind of coming in and, connecting people across those medical deserts, connecting health, care professionals with those who need it. We haven't really seen that, come online yet. We're also seeing, this nursing shortage, but also fewer people looking to the sort of medical career path because of how expensive it is, how much debt they take on in school, or we're seeing them look to cities or places where there already are healthcare professionals because that's where they think they can make, enough income to pay off that debt and also to support themselves and their families. So it's creating those medical deserts here in the U.S. All of these trends are really going in the wrong direction if you think about it. That said, this year we did see, and you and I have talked about this, Jeff, some really big steps toward fixing some of these problems, one of which is several big medical schools, Cornell and others, starting to eliminate debt for entire classes of students. Or starting to find sources of aid for entire classes of students. So I think there'll be a much more kind of acute conversation around ensuring that enough people are choosing that path to become medical professionals, ensuring that it's a diverse group of people who are doing that, a group of people who also are willing to live outside of major cities and metropolitan areas in the U.S., and also, as I said, a diverse group of people, because right now a lot of the people entering this profession are people who can afford school already, right. and it's just perpetuating, that income inequality and wealth gaps and all that stuff that we see.
Devin, we've had an amazing increase in mortality, and just listening to some of the statistics that you're talking about, it's clear that the world is, we're not having the same birth rates. Are we actually, could it be that we actually go in reverse, that we see the extension of mortality actually begin to contract because you've got all these healthcare issues? If you can't afford healthcare, if you can't afford to take care of yourself, if you don't take care of yourself, could we actually go backwards? And I'm not saying I want this, but I mean, is it possible that we could see contraction in that area?
Yeah, we've seen this demographically in several major economies and countries, and it's starting to show in the U.S. declining fertility rates. As you said, this has major implications, not just for healthcare, but for just productivity in this country and of workers and economies in different parts of the country, as well as the overall U.S. economy. So I think, that we're going to be talking about that a lot more. I haven't studied up so much on why fertility rates are falling and what experts say we should do to combat that. But I just know that this is the most important kind of long-term trend, is literally the existence of people who can be productive and produce economic output all around us.
Yeah, and it's not just Americans. I mean, we're to look at countries in Asia, in Europe. They are aging populations. Japan, China, other societies. I mean, it's not just here. And I don't have the answers. I mean, I guess the experts would say just have babies. We're not here to promote that or not promote it or not promote it on the show. People can do what they want, but it seems to me that is probably what people would say. I don't know what else you could do. I mean, we're getting more efficient, right? And so you can do more with less, but the only thing you can do is.
Although we talked about a couple weeks ago on the network the rising cost of childcare,
True.
And another kind of generational shift has been, which is great for a lot of reasons, but women entering the workforce in much higher proportions than previous generations, and so that raises the question of childcare, or at least changes the equation from previous generations. And so there's a lot of push and pull and different variables going into all this.
Yeah, I mean, I agree. It's not enough that we're not going to be able to solve this in 20 minutes, but I do think that it's something that we need to continue to talk about both here in the network and in other places, because these issues will not go away. They will affect us, our children, and our children's children down the line. Devin, always a great time talking with you. Appreciate you sharing the big ideas from the LinkedIn team, and always enjoy talking to you about healthcare and all these important issues. Have a great rest of the week, and we will see you later on the podcast, or at least we'll hear you on the podcast as well.
Sounds good, Jeff. Take care.
And that wraps up this episode of BRN AM. Hope you found it educational and entertaining as well. Hey, have a financial topic or someone of interest that you think we should talk to? Drop us a line. And don't forget, for all the news in retirement markets, technology, personal finance, so much more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Keep on saving, and don't forget, roll with the changes.